A 2x leverage ETF on the entire world, tracking 47 countries and close to 3,000 different companies. Every major market in the world leveraged 2x. It almost sounds like the holy grail of leveraged investing, right? In one single ETF, you get automatically global diversification. How cool is that? This ETF just launched a few weeks ago, and the question is, does it fit your portfolio? Alright guys, stay with me. I will let you know everything about this ETF, the ticker symbol, and whether you should include it in your leverage ETF portfolio or not. I'll see you in a second. Hey guys, my name is Henry, and today I'm going to tell you about a 2x leverage ETF, the first ever that tracks the entire world. The name of this ETF is Scalable MSCI ACWI World Leverage. It's a mouthful, but the ticker symbol is simply SC2X. Okay, it's the name of the ETF, SC2X, and it's issued by X-Trackers, and it's listed in Frankfurt, actually listed in Europe, so our European friends also have access to this ETF. So why should anyone actually own this ETF? Well, because it gives you global diversification. In one single ETF, you have 47 different countries and reduces country risk. So if you are concerned that maybe 5 or 10 years from now, the US will no longer be the biggest economy in the world, which I think is not true. I think it's probably going to be the biggest economy in the world, even like 50, 100 years from now. But if you believe that the world is changing and you want to have an ETF that will automatically rebalance the countries according to their size, according to the market cap of their companies, this is the one, right? Because if the companies in the US start to decline in market cap, they will be replaced by other companies. So with this ETF, you get global exposure, but that doesn't mean that you don't have a big weight into the US, because the US stock market is still the largest in the world. So when you buy a global ETF, you also have exposure to the United States stock market. Let's jump here on my computer and let me share with you the biggest countries in this ETF. So the number one country is still the US. It weights 63%. Then you have Japan, United Kingdom, Taiwan, Canada, and other countries, which probably include like China and so on. But this ETF will actually give the weight to the countries according to their size and their importance in the stock market. Currently, the top companies in this ETF are Nvidia, Apple, Microsoft, Amazon, Alphabet, TSMC, Broadcom, Meta, and JP Morgan, all American companies. I'm sorry, even if you go global diversification, you still have to handle with the US companies because they are still the largest in the world. But that doesn't mean that this ETF is not good. It just means that it's doing its work, okay? And if tomorrow there is a European company, a Chinese company, a Japanese company that becomes one of the top 10 in the world, that company will automatically be included in these ETF, and it will have the corresponding weight. And also remember, this ETF is highly diversified. It's close to 3,000 different companies instead of S&P 500, which is 500 companies, or NASDAQ 100, which is only 100 companies. So does this ETF actually fit your portfolio? If you have a leverage ETF portfolio, you are probably using ETFs such as QLD, which is 2x NASDAQ, TQQQ, 3x NASDAQ, SSO, which is 2x S&P 500, and UPRO, which is 3x S&P 500. But those ETFs are highly concentrated in the US. That's not a bad thing, but if you want to give even more diversification, you can use this new ETF, the SC2X, to actually have global diversification. And sometimes this can actually be a good thing. Let me show you these. Okay, so here you have two lines. You have the blue line, which is the S&P 500 SPY ETF, the non-leverage version, okay, and the orange line is the ACWI. ACWI is the non-leverage version of the same ETF, is the global stock market ETF, the iShares Global Stock Market ETF. And the thing that I want to share with you here is that, for example, last year, at certain periods, actually the global stock market ETF outperformed the S&P 500. For example, for this specific period that we are looking here, the S&P 500 returned around 13.7%, while the ACWI return 16.8%, so 3% more. 3% more is not much, but again, it gives you more diversification. And now you can leverage these 2x with the SC2X ETF. So again, this reduces single country risk, and although historically US have been performing very well, and I think it will continue performing, if you want to give more weight to other countries, be a bit more geographically diversified, you can still do it with this ETF. And this for the first time, because this is the very first leverage ETF that invests in the entire world. Because now this ETF gives 60-something% weight to the United States and 30-something% weight to the rest of the world, so you are definitely more diversified having 3,000 companies in your leverage ETF. Now, one very important thing that I always do before buying any leverage ETF is using the Kelly Criterion curve to understand if I can actually use leverage to make this investment or not. I talked about this extensively in my Henrique Academy, okay? You should check the link in the description, because in the Henrique Academy, you find a 5-hour-long course leverage ETF. I have a video 1-hour-long video with 18 different leverage ETF strategies. Some of them return 10, 20, 30x return on investment. You should really take a look at them. And you can take advantage of a 7-day free trial. You can go, join the community, take a look around, and you can stay around or just cancel it. So the thing I want to share with you, let's jump here now on my chart, is this Kelly Criterion curve, okay? And on the Kelly Criterion curve, you can see that the optimal leverage for the ACWI for the non-leveraged version will be for the last 10 years 4x. You should never do the optimal, the full Kelly, okay? You should do half Kelly, which is 2x. And as you can see, 2x is here, and it's the perfect optimal sizing to invest in the world stock market is 2x. And this is precisely what the SC2X ETF offers. It's 2x leverage. So it's perfect leverage because it's not too aggressive, it's not too conservative, you are not leaving guns on the table, you can use 2x to actually invest in the world stock market. But again, if you think this Kelly Criterion curve is too complex, you should definitely join my Henrique Academy, because I teach everything about investing safely in leverage ETFs for the long term to multiply your retirement by 3, 4, 5, 10x, okay? Now, you also need to have into account that this ETF is very, very recent. If we jump here again on the chart, you can see that it was just created a couple of weeks ago, and there is not much historical data. We have here the green line, and it barely moves because it's a very, very recent ETF. So this ETF might not have full liquidity, okay? So you need to have into account that it's a recent ETF. The total assets under management might be just a few $1 million. So if you are a large investor and you want to buy millions of dollars of this ETF, you need to contact your broker and see what's the best way to do it. If you are a small investor like me and you want to buy just a few $1,000s, you can probably find this ETF in any broker, and the liquidity shouldn't be a big issue. Liquidity is usually a big issue if you are a very large investor and you want to place a very large order. The expense ratio for this ETF is 0.45%. 0.45 is actually kind of low for a leverage ETF. Remember, if you use leverage with a margin account, which is very dangerous, you can get margin called. Please don't use margin accounts because it's really not worth it. It's not worth it not only because you can be margin called and lose everything, but also because of the cost, okay? Margin account, you probably pay at least 5% interest on that margin loan. But if you use a leverage ETF such as SC2X, you get the same leverage but with paying 0.45%. It's really, really cheap, to be honest. So who is this ETF for? European investors. If you don't have access to other ETFs, now you have access to this one ETF, okay? I know in my community I actually share a fact sheet with all the different ETFs available in Europe. You should check that one. But this one is another new ETF that now is available for Europeans. US investors that are also too concentrated in the US and you want to diversify a little bit more globally, you can also join this ETF. And if you believe that other countries in the world might outperform the US, but you don't want to make a specific bet, you can just buy this ETF. Because remember, sometimes leveraging other countries can be disastrous, okay? For example, the 2x leverage ETF that invests in Brazil over the last few years went down by 99.8%, something like that. So you should never do 2x leverage in specific countries because their economies, their politics might be messed up. But if you do a global bet, well, you are already exposed to the best countries in the world, to the best economies in the world, and these ETFs are self-healing. They will just automatically give more weight to those countries that are winning. That's it. So I really like this ETF because it solves a problem, solves the global diversification problem, which for leverage ETF investors was not solved yet. Leverage ETF investors, you will only have S&P 500, NASDAQ, there are a couple of European ETFs, but there was no ETF that will give you like a total global exposure. And now you have it. So am I buying this ETF? I don't know yet. I don't know. I have already a number of ETFs in my ETF portfolio. I have probably 6, 7, 8 different leverage ETFs in my portfolio. So I will still think a little bit about it. But if you are someone now building a new leverage ETF portfolio, you can definitely consider this one. And you can start doing some dollar cost averaging, putting a little bit. But again, if you want to check my 18 different leverage ETF strategies, join the community, link in the description, 7-day free trial, and you can check all my strategies. Alright guys, if you enjoyed this video, give it a like and subscribe, and I hope to see you again soon. Bye bye.